The stock market is supposed to be used for individuals to take shares into a company, and if the company does well, so too can the shareholders. In tough times, the stocks will suffer and those holding shares will get burned. Today, however, the stock market is a tool for the central banks to manipulate and control the populace. You came here for the truth, so let me unveil that for you. Today I'm going to show you several charts. Let's begin. Equities overbought around the world. No matter where you look, we are seeing the same thing. This is the 14-day relative strength index, and guess what? We are so completely overbought at this time. Some more than others, that's for sure, but ultimately we can see this trend. Central banks printed money, pushed the shares up. All right. I'm always reminded of this. Weimar Germany, classic example, wheelbarrows full of money. German paper marks per US dollar between 1922 to 1923. And you're seeing this on the logarithmic scale. All right? Look at it. Let's just, to make it easier, it was around 100 at this time in January 1922. Later in 23, you can see where it has gone. Let's say a year and a half. It basically goes from a level that is reasonable, something that can be traded and exchanged and people can use it as a currency, to where it is completely and utterly worthless. And that's what's happening today, except on a global level. So you don't notice it as much. You might see the US dollar and the euro trading. Maybe the euro's at 120, maybe then it goes to 105 and things start to get a little concerning. Where is it going to be? And then the euro is 140. And then you look at the Canadian dollar and the US dollar and you see the exchange rate, and people are wondering and worrying in the Forex markets. But all of them are losing ground to real goods. And this is a topic I used in my first book because I knew how important this was. You cannot, absolutely cannot devalue a currency the way that they're doing and make that okay over the long-term period. Some would suggest that you can do it in the short term. That's arguable. But ultimately, if you devalue your currency, you're going to have this snowball effect. It is just the way it is. That's what I'm reminded of all the time. When I think about the stock market, I don't think about it being worth any more than it was 10 years ago, 20 years ago, what have you. I just think that it is the devaluation of the currency that it's measured in. And you can see that here in this case, where one currency versus another, were they necessarily worth any more? Well, it's just a piece of paper. But the currency was devalued because they kept printing so many, and ultimately, nobody wanted to accept them anymore. That's what's happening today. Just on a slower scale because it's a global issue. Above the long-term average, about 80% of the S&P 500 stocks trade above the 200-day moving average. One of the more important indicators to look at for those who are into technical analysis. Okay, that's a standard indicator, 200-day moving average. But you can see here where it has gone. That's your moving average that you're looking at, and it doesn't even matter because it's gone way beyond that. And it will continue to do so. There's no problem with that because of central bank intervention. If you didn't have central bank intervention, we wouldn't have this issue. But we've gone into new territories. I mean, central banks have never been hedge funds, ever in history. They've never engaged in these policies. The Bank of Norway, the Bank of Switzerland, you're seeing this all over the world. They are all printing money, buying up shares, and particularly in the US. So of course you're going to move above the 200-day moving average. That's pretty obvious. Screaming overbought. The S&P 500 surge drives momentum gauge above 70. And there's no reason to worry. There's nothing we should be concerned about. Okay, so it happened before, close to that, couple instances. But as you will hear from Jim Cramer, you'll hear it in the news consistently, this is nothing to worry about simply because the economy is doing well, jobs are being brought back to the US, and in the end, everything will be all just rainbows and flowers. Not sure about that. Sequential change in revolving and non-revolving credits. What we are looking at right now is essentially credit card debt. Okay, and I'll show you another chart here for a moment. Revolving consumer credit and monthly change. They're a record high credit card debt at this time. And I'm supposed to sit here and tell you that everything is fine in the economy, yet people are in literally the most debt that they have ever been. People are taking out the maximum amount on every credit card. I showed you the Google Trends that shows Walmart credit card. Okay, people are searching that term and they want to basically expand as much as they can. They are taking home equity line of credits like the world has never seen. They are engaging in these second mortgages. They have payday advance, cash advance and payday loans and all these things where you're willing to take out a $100 loan, and in some cases, many cases, people are paying back $300 for that $100 loan. These are big money scams that are happening here. Credit cards, everything is this really high rate of interest, yet the central bank is basically giving it away at this minuscule rate of interest. So there's a lot of money being made, not by you and I, but by those financial institutions in one way, shape, or form, whether it's at the higher level or the mid or lower levels. And you'll see that people are just absolutely swamped with debt, and they're pushing themselves to the max, always. That's how it will always be until they have moments where in the financial crisis you have this deleveraging, right? Why is that? Why is that the case? Well, there was a lot of bankruptcy, so people get them off their back. But what do? They just engage in the exact same policies over and over again. Okay, so what? Personal savings rate is at the lowest level it's been in a very long time. We don't have to worry about that. You don't need savings because you have something called margin. That's right. I could take $1, and we're just making silly examples, but I can take $1, put it on the stock market, and I could actually be betting $100. They'll give me that leverage. It's no problem. The financial institutions are willing to give as much as you need. That's what they do. There are a lot of leveraged ETFs that are very easy for people to buy into. They have, of course, leveraged different futures contracts and everything else. Why not? Why need a whole $100 when you could just use $1? I don't even need to have it, simply because I believe that the stock market is going to continue higher and higher. Therefore, why in the world would I ever use my money when I can just use leverage? Well, a lot of people make a lot of money using leverage. That's a fact. And with the stock market continuing to rise, this has been very beneficial to a lot of people's pocketbooks. But what do? Well, they take their earnings and they keep them in, and they let it roll, and they make more profit. But when the time comes to reap what you sow, then unfortunately for a lot of people, they're going to be standing in line, getting their handouts from the government, and it will be a fact. But in this time, if they are actually taking profits, they're doing a very good thing. Yes, they're going to pay a lot of capital gains, but hey, they made those gains, and so they can enjoy the benefits of that. But for most people, they won't sell off. They're going to hold on for dear life, as they say, and it will be an unfortunate case for a lot of people because they will get the margin calls and they simply can't pay back. Am I saying that the stock market is going to crash tomorrow? Is it going to crash next month or maybe even next year? Well, you can ask the central banks what they think. I don't know when it's going to crash. All I know is that this market is based upon lies. All I'm trying to do is point out the risk and the fragility. But look in the comment section. Do yourself a favor. Look in the comment section, particularly after the first day. It's better to come back on the second day because it's not the subscribers that see it on the first day. And you'll see a lot of people have a lot riding on this market going up. And I do believe that many of them are on margin too, so they have a lot here. I hope they didn't go into taking out of their equity of their homes or really expanding far beyond and risking their livelihood because of this, their children's tuition money and everything else, because this does happen every single time around, and I know for some it's going to be unfortunate. If you found the video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.